Hello and welcome. This is All You Need to Know. I am Agam Akil. Let's start by talking about the global markets, and there is weakness across. Let's start off by taking a look at the US markets. As you can see, we are seeing considerable weakness. In fact, 4.4% cuts for the Nasdaq, and that is a matter of concern. Coming through another 3% cut for something like an S&P 500. That weakness has seeped into the DAX as well as the FTSE. However, is the only one which is closed in the green for now, and that's having an impact on the Asian markets. The Nikkei is declining by as much as 3.5%, and the S&P ASX down 2.2%. We're also seeing a weakness in Hang Seng, that's also down as much as 2%. Does that mean we can expect in our own markets? Well, as per the indications of the SGX Nifty, the cuts have narrowed from 150 odd points to about 100 points at this point in time, but we are likely to see the Nifty move towards 10,100, at least as far as the opening is concerned. That brings me to how the Nifty had done yesterday, and we did see some strength come through, considering the Nifty advanced by as much as 0.7%, the mid-cap and the small-cap indices outperforming. The same for the Nifty banking and the PSU banking index, which also saw advances coming in through. But in terms of ADRs, they've seen weakness in today's day of trade, and we do see Tata Motors, Dr. Reddy's take cuts. Wipro perhaps is the only one which is seeing a decline of around 1%. This largely to do with inline earnings coming along. But coming down to your institutions, we did see FII sell stock worth to over 2,000 crores on a net basis. On the other hand, DII is buying stock worth a little less than 1,900 crores. And when it comes to contributors, it was essentially the financials which kept the Nifty high and up, including HDFC, Bajaj Finance, which advanced by as much as 10%, and of course Bharti Airtel, among others. But coming down to the futures and options space, well, we did see a little bit of a pickup in rollovers, considering it is expiry, currently standing at around 65% for the Nifty futures, and for the Nifty banking futures, rollover standing at around 53%. But let's take a look at your open interest distribution, and on the lower end you do have 10,000, marking that strong support coming through. And of course on the higher end you will find resistance around 10,400 and 10,500 based on the accumulation in calls. But when it comes to changes in open interest yesterday, as one might expect, unwinding in a whole host of these calls and writing in the 10,000 put. The India Volatility Index did come up, but only slightly, less than 1%, still just about 19. And the put-call ratio remained largely unchanged at around 1.1. The Nifty Banking put-call ratio at around 0.82. And Diwan Housing Finance moves out of the band. Of course, we've also had Bajaj Finance, which was in focus, which moved up by as much as 11%. And we've also seen a lot of traction in Bharti Airtel. That sees a lot of longs coming through. And finally, Bajaj Auto on the losing end. We do have a decline of around 4.5%. So we watch out for some of these names. But with that, let's now grow across to Bloomberg's Heather Strode waits for the top international headlines.
Law enforcement agencies are investigating apparent explosive devices mailed to Barack Obama and Hillary Clinton, as well as to CNN's offices in New York City. On Monday, police detonated a pipe bomb at a New York residence of billionaire George Soros. President Trump called the acts abhorrent, but CNN boss Jeff Zucker said the president and his press secretary failed to understand the seriousness of their attacks on the media.
The media also has a responsibility to set a civil tone and to stop the endless hostility and constant negative and oftentimes false attacks and stories. Have to do it. They've got to stop. Bring people together.
The Crown Prince of Saudi Arabia has promised justice in the murder of journalist Jamal Khashoggi. Speaking at the kingdom's investment conference, Prince Mohammed bin Salman said he would bring the killers to court and prevent a diplomatic breach with Turkey. He denounced the crime but offered no new information about what happened in the Saudi consulate in Istanbul.
It is a heinous crime that cannot be justified. Today, Saudi Arabia is carrying out all legal things to finalize the investigations, to cooperate with the Turkish government, and to present the perpetrators to the court and take their judgment.
Well, Tesla soared in late trading after posting only its third quarterly profit ever and generating more cash than expected. The adjusted net was $2.90 a share, well ahead of forecasts of a small loss, as the Model 3 became one of the top-selling sedans in its home market. Free cash flow was about $880 million, and that is a dramatic turnaround from the billions that Tesla had been burning as it ramped up production. Microsoft posted another quarter of revenue growth driven by cloud services, highlighting its success in shifting its focus towards internet-based computing. Profit and sales for the period through September topped expectations, with revenue from Azure jumping 76%. Profit rose to $8.8 billion, or $1.14 a share, topping the 96-cent average estimate in a Bloomberg poll. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Heidi Stroud-Watts. This is Bloomberg.
Well, back to local equity markets. Stock of the day is International Paper, APPM. Well, the company has delivered good set of numbers. 18% uptake in the top line front. The number stands at 336 crore and compares with 285 crore that we've seen in the corresponding quarter. In terms of the bottom line performance, we have operational performance of the company has risen more than 130% to a number of around 72 crore as compared to 30 odd crore that we've seen in the corresponding quarter. The margins have expanded to 21% as compared to nearly 10.7%, and in profitability it's a more than 500% jump there. 37 crore compares to nearly 6 odd crore. If we look at what goes behind the making of these numbers, higher revenue and cost optimization clearly has led to good set of operational performance from the company. Raw material cost as a percentage of net sales, that number has declined to 34% from 39%, while the employee cost expenses as a percent to the net sales has declined to 11% from 14% seen earlier. What also goes behind the making of bottom line numbers, it's the higher operating income and the low interest cost which has aided the bottom line performance. The finance cost has fallen as much as 65% for this company to a number of around 2.4 odd crore for this quarter. In terms of other income also, we've seen a significant uptick there, a 140% jump year on year basis, which has led to good bottom line show. But what if you look at the 6 months performance of the balance sheet, the long term debt for the company has actually decreased by 38%. The short term has gone down by 61%, and the total borrowings in all have gone down by as much as 53%. In terms of cash and cash equivalents, that's seen an uptick of nearly 45% in this quarter on a 6 monthly basis.
Well, amongst other stocks to watch out for in trade include L&T Infotech, which reported a very strong set of numbers after market hours yesterday. So while revenues grew 8% sequentially, EBIT grew by about 16%, and that also led to EBIT margin increasing by about 130 basis points sequentially, while the net profit growth came in at about 11%. Next that we have on the list is Mahindra & Mahindra Finance. It was a beat as far as this lender is concerned. NII strong growth of 49%. Net profit rose nearly more than doubled to 381 crores. Even if you look at the other parameters like the AUM growth, that came in at a strong 26%, while the gross NPA came off from 9.4% to 9% levels, nevertheless remaining elevated. In fact, the disbursement growth also for the quarter was strong at 39%, and the management said that they have a positive gap as far as the LM is concerned, so they stand to benefit in the current environment. Bharat Financial also a very strong set of numbers. Net interest income nearly doubled to 519 crores. Net profit came in at 233 crores. Even if you look at the other parameters, loan growth was 46%, while the gross NPA number came in at 0.4% as compared to 0.3%. So it has actually moved up slightly, but nevertheless, it's a very small number. Next on the list is SKF India. 13% revenue growth, EBITDA growth at about 11%, and net profit growth at about 14%. But more importantly, they have announced the buyback price which is 2,100, and that is about 22% premium to yesterday's closing price. So that could probably have a larger bearing on the way the stock reacts. Watch out for that one. You also have L&T Finance Holdings, which reported numbers. It's a mixed quarter, and I say that because while the operating performance was strong with the net profit growth of 62% and the gross NPA coming down to 7.1%, they did share some disclosures to certain important accounts. So they said that they have about 1,800 crore exposure to some SPVs of Island FS Transportation and another 800 crores of exposure to 3 projects of Super Tech. So this is something that may weigh on the stock. Watch out for this one. And lastly, a very weak set of numbers coming from Lakshmi Vilas Bank. Net loss of 132 crores for the quarter. Net interest income also fell by about 35%. Even if you look at the asset quality performance, the gross NPA ratio moved up to 12.3% now. So that's probably a negative reaction to expect on Lakshmi Vilas Bank.
Well, the second quarter of financial year 2019 was a weak quarter for Indigo. Now, if you see the headline numbers, the revenue of the company was higher by nearly 17% to close to 6,185 crore rupees. However, the EBITDA, now a key profitability metric for an airline company, now that plunged by nearly 93% to close to 100 crore rupees. Now, EBITDA margins that were at an all-time low of 2%, while the company reported a net loss for the very first time. Now, the net loss before tax for the company was nearly 988 crore rupees versus a net profit after tax of 552 crore rupees. Now, the reason why I'm taking net loss before tax number is because that is the actual loss that the company has incurred. Now, as the company recorded a deferred tax rate of nearly 336 crore rupees in the quarter, the net loss amount was reduced to nearly 652 crore rupees, but the actual net loss incurred by the company was close to 988 crore rupees. Now, the factors that led to such a weak quarter, well, they have remained the same. The first one is the falling ticket prices. Now, if we see yields which measure the average earnings per passenger per kilometer, now that declined for the third consecutive quarter, and in fact the company has reported its lowest ever yield since listing. Now, this is because of competition and price wars that the company's yield declined by nearly 10% to close to 3.21 rupees in the second quarter. Now, this falling yield is happening when the cost of the company is rising. Now, if you see the fuel cost, now that increased yet again for Indigo, majorly because of higher crude prices. Now, in Q2, Indigo's fuel cost per seat kilometer increased by increased to 1.56 rupees, which is the highest that the company has reported in the last 15 quarters. Now, despite their fuel efficient fleet, if you see the quantum of increase for Indigo, now that has been higher. Now, if you see the fuel prices, they had increased by nearly 40.5% compared to last year, but Indigo's fuel cost, now that increased by nearly 43%. Now, third is weaker rupee. Now, rupee depreciated by nearly 9% compared to last year, which led to a 7 times jump in their foreign exchange loss. Now, the company reported a foreign exchange loss of close to 335 crore rupees in the second quarter. Now, some other factors that impacted the second quarter earnings. Now, the other income of the company, now that increased by nearly 53% to close to 329 crore rupees, which also helped the company report a lower net loss. However, a 35% rise in other expenses offset some of this positive. Now, the rise in other expenses could be because of higher maintenance costs that the company has been incurring in the past, and because they had inducted older aircraft when they were facing the neo engine issues.
So, as you know, we have taken only 1 month revenue of Alight in quarter 2. So, there will be certainly a momentum which will get created because 2 months. But more than that, I think it's a landmark deal. It's a largest deal that we ever signed as an organization, and it's truly what we call as a front office digital experience deal for our customer and our customers' customers. So I would go far beyond the financials of just that deal. I think it's just a deal which makes us look very different from sheer capability and what we can do for our customer standpoint. And therefore, we are all very encouraged by the deal and the success behind it.
But any timeline on what kind of impact we'll see from which quarter, the real impact of this deal also?
It will start flowing in from quarter 3 completely, and because it comes with a I mean it's a service which we provide 100% from day 1 to our customers. So it will be fully you will see the full impact of it from quarter 3, and there is no prolonged ramp-up period around this.
Right. And looking at the Q2 margin, what's the impact of rupee depreciation and the wage hikes, and what's really behind?
So I think we are very encouraged by our performance. So, on the face of it, the number looks at a 14.6%, but if I normalize for the one-time impact we took on our customer settlement, that number is 18.1%. And there, the overall two elements have played out. We have expanded our operational margin by operating levers by about 1.8%, despite taking 2 months salary impact. And we have been helped by currency by about 70 basis points, all of which has flown through the margin. So overall, I think it's been a very good quarter. As a CFO, I feel very happy that we expanded margin from a normalized basis in Q1 to Q2 by a 2.5% kind of number.
Bharti Airtel will be reporting its second quarter numbers today post-market. Now, if you see the headline numbers for Bharti Airtel, the revenue is expected to rise marginally to close to 20,100 crore rupees, while the EBITDA is expected to drop by nearly 3% to close to 6,500 crore rupees. Now, margins that will contract to 32.2%, while the company is also expected to report a loss of close to 990 crore rupees for the very first time. Now, ARPU, that is the average revenue per user and the key number for the telecom operator, that is expected to fall yet again, and in this quarter is expected to fall by nearly 7% compared to last quarter to nearly 98 rupees. Now, the reason why ARPU will be falling in this quarter will be because this quarter will see the full impact of Telenor consolidation, second because of ARPU down trading, and third because of the pricing pressure seen in the postpaid segment of Bharti Airtel. Now, if you see the India business, the India margins will be impacted because of rise in diesel prices, strong network rollout, and because of higher tower rentals post the Vodafone Idea merger. On the India business, if you see the home broadband segment is expected to remain under pressure, while the DTH business is expected to benefit because of the price hikes taken by the company in the first quarter of financial year 2019. From the Africa business, analysts are expecting healthy trends to continue on the back of the tight cost control initiatives taken by the company. Also, the local currencies in Africa were stable against the US dollars, which should help the margins to remain stable when it comes to the Africa business. Lastly, a weaker rupee, now that should result into a higher interest cost and foreign exchange loss for Bharti Airtel in the second quarter of financial year 2019. Lastly, key things to watch out for from the Bharti Airtel earnings would be their capital expenditure plans for the second half of financial year 2019, how they are going to fund it, what is the comfortable leverage ratio for the company, their outlook on ARPU and revenue growth, management commentary on Africa asset listing, commentary on further stake sale in Bharti Infratel and DTH business, and also management commentary on the impact of Jio's aggressive tariff and the impact of Jio Giga Fiber will be the key things to watch out for from the Bharti Airtel earnings.
Well, Yes Bank should continue to report healthy earnings on account of the robust business momentum that has continued. We already know, and the bank has already shared some of the key numbers for Q2 FY19 earlier in October. These are the unaudited numbers. They said that the loan growth for the quarter was 61%, deposit growth 41%, and the gross NPA number was 1.35%, which has gone up marginally from 1.31% in the June ended quarter. They had reiterated their credit cost guidance at 50 to 70 basis points for FY19. And also said that they have a liquidity coverage ratio of 101% as of September 30th, which is above RBI's requirements. So then in terms of the other numbers, what are the expectations? Well, net interest income is expected to grow by about 27%. Net profit is expected to come in at 1280 crores. And on the other hand, deferred MTM losses and the provisioning for the same that will be required to be done, that will continue to keep the overall provisioning elevated. Slippages and credit costs, however, are expected to moderate on a sequential basis. But aside of all of this, what is going to be important to watch out for is going to be the update on the RBI risk-based supervision audit for FY18 numbers and any divergence. This will of course be shared only if the audit has been completed, but that's one important thing to watch out for. Exposure to IL&FS is also going to be critical. They had disclosed that they have some exposure but hadn't disclosed the quantum. So let's see if they disclose it this time around and what they have to say with respect to the provisioning to be made for the same. Capital capitalization levels are also going to be important to watch given the robust trend that we have seen in the loan growth. They have a thin capital with CET1 at 9.5%. So details on capital preservation, growth guidance, and also anything to do with a management transition are actually going to be the most important monitorables.
It would be a slightly muted quarter for Maruti Suzuki this time. People have been expecting strong growth, but clearly the commodity costs have been weighing on the auto company's result this time in the second quarter. So if you look at the revenues, only a 2% growth expected here, to do with the fact that there has been a decline in the overall second quarter volumes. Because last year we had the festive season base, so because of higher base we had a lower volume growth on a year-on-year basis. EBITDA also, as I was mentioning earlier, because of lower volumes and higher costs, would be seen lower by nearly 13% on a year-on-year basis to come in at a little over 3,200 crores. Profits also seen by declining by nearly 19% to come in at 2,023 crores. Margins, as the case with the two-wheeler companies which have reported earnings so far, and the auto sector companies which have reported so far, have been seeing weak margins. Maruti also could see a margin decline of nearly 150 basis points on a year-on-year basis. Margin seen at 14.4% versus a level of 16.9%. Of course, because of the recent price hikes, there could be some realization growth for Maruti Suzuki. But apart from that, the management commentary on the rural market demand, how the demand has been shaping up with the festive season, is something that we'll be watching out for apart from the earnings.
Well, JSW Steel will be reporting the earnings first time around as a Nifty 50 company. Good set of numbers expected from the company. Top line growth, we're looking at a 23% uptick there to a number of around 20,390 crore. EBITDA in terms is expected to go up by as much as 55% for the company to a number of 4,698 crore on consolidated basis. The margins are expected to expand to 23% as compared to 18% that we've seen in the corresponding quarter, and the profitability of the company, that's almost expected to rise more than 140%. In terms of the other parameters that we like to keep an eye out will be the volume figure. Volumes are seen up by as much as 3.6% to a number of around 4.1 MT. Year-on-year basis, we're expecting a 3.5% growth out there, and sequentially a 9% uptick. EBITDA per ton, important metric, that's seen higher by as much as 50% year-on-year basis, but is seen sequentially lower by 15.7%. Realization per ton is seen up by 18% year-on-year basis, and we are estimating a number of less than 50,000 rupees for realization per ton. What goes behind the making of the numbers is clearly the volume growth and the higher realization, which is expected to aid the EBITDA per ton performance in the seasonally weak quarter. Realization is also expected to be higher on account of good demand and higher prices. EBITDA of US Plate and Pipe Mill, the two subsidiaries of the company, are expected to display growth due to stable realization year-on-year basis, back of which we are looking at solid set of consolidated numbers. Sequentially, EBITDA per ton, however, is expected to see some kind of downtick impacted by the kind of input pressures, be it in the like of higher coking prices, iron ore costs. But the two things that we like to keep an eye out will be the price hike and the impact of coking coal. Apart from that, we'd also like to keep an eye out on the domestic steel demand growth and the commentary coming on there forward.